All right, good morning to all. Sam here. Monday, January 15th. Had some members interested in an update on XLM, Stellar Lumen. I've got it here on a 2-hour chart to Bitcoin. Now, of course, Stellar Lumen is one of the majors here. So if we go over to CoinGecko, 74 on the scale here, market cap of 11.8 billion. This is, a major, one of the majors. And you can see the bulk of it's traded against Bitcoin. We do have some others, but primarily against Bitcoin, and that's a fairly close spread between Binance and Bittrex. So I've got it up here on Bittrex, and this is the 2-hour. Now, to get some perspective on it, we got to go out a little bit. So let's go to the 8-hour. And we can see we've had the classic pump dump, right? So we've come just right back, and I'm just wicking off the lowest low from where we start this. Now, I've done this chart before, so this is a bit of an update. So again, this is not to be ignored. I don't know that I would count this as a 1-2. Whatever happened here has come all the way back down to this base level, and I think we just start again here. But that remains to be seen. This could be something to consider. Again, I mean, it's worth wicking it off because clearly there was some trading there, and that was resistance. So it's not something to completely ignore. So for me, I'll just wick it off and kind of keep it in the back of my mind so I don't forget it once I blow out or zoom to say a 2-hour here where I can get some perspective on this. So that's the low that we're talking about. Here's that prior resistance high. So opening this up here, so we now I've got this in log scale. There's not a dramatic difference between log and not log, but just a little more separation so we can see it here. So we do get this kind of a choppy first wave here, right? So leading diagonal, deep overlap of the 1, but it's we get a 5-wave structure. We come up to the 1, then a pretty sharp sell-off in for the 2 before we start this big ramp. So to open this up a little bit, now I've got this. So this is how I've got it. I've got the current count that I have on it. So if we look here, I mean that's a pretty good ramp. You have to say. And then we start the correction. So there's the A wave right to the 50. I mean it's the front run by a tick or two. First reaction. So that's why I will tell you to be cautious buying the first sell-off, because most typically what you'll find, and from an Elliott count perspective, you've just got your A wave in. Then we put in the B. We get a little 3-wave separation. There's the B. Down we come for the C. So now we have a technically valid pivot to work with here as a potential for. It meets the pattern we'd look for. We're in the right zone here from a price fib relationship, pulling from the 2 low up to the 3 high. I've got everything that I can look for. So I'm right in the pocket here between the 50 and the 618. And we get the first reaction here. This has come up here. Now we're a little soft today. Everything's a little soft today. So we're getting that's not necessarily bad news, right? So the thing that you don't want to see is when you come in and if Bitcoin's in a range and you see the alts are all mooning. Now, great, that's great if you're long, but if you're looking for new opportunities, a day when you see softness in the alts can be a day to get position, to add to positions, or to look for fresh longs. If it's just up all the time, it's hard to get in. So here, this appears to be offering a reasonable spot to look for the next entry here, looking to play for the 5th. So nice, beautiful 1 wave off of this pivot here. So we have a potential median line pitchfork scenario that gives us some market geometry and some structure to work with. So ideally, now again, just as we had the 3-wave subdivision here, we're looking for the same thing here coming into this too. So interesting, we've got the Vegas wave coming right here at the 50. We've got the lower parallel for some structural support. Here's our hot box here at the 61865. So this is a really reasonable place to be looking to get long. So first play might be here at the 50. We're looking for a return to the median line, of course. So if you want to give it maximum amount of room, I'd be under the 50. So remember, you're seeing 2 things here. So swing low from the 2 to the 3 high. There's the 50. Here's the 38 again. So that's coming in place. So this little bit of confluence here. I mean, that 38 is not really relative to this, but in the larger scheme of the pattern here, I wouldn't ignore it again. So that's just more confluence. So if I zoom in on that, you can see what I've got here. I've got my Vegas wave. So here's the primo entry for a Vegas wave, is between the 169 and the 144. Here's the 38 from the larger degree, and here's the 50. So that is what you call confluence. Okay, so we've got a really nice little pocket right here where we might be looking for a fresh long. Reasonable risk reward here, so you would not want to give that. So let me rephrase. I wouldn't give that beyond the 65, knowing that it could go deeper. But for me, if I'm looking for it, I'd rather take the smaller hit and then just look to re-enter. Some people will disagree with me on that, but I have no problem if I get stopped out there. Again, that's a small loser. It's not going to hurt me. I get stopped out all the time. I don't sweat it. It's just part of trading. It's as long as it's not something retarded like that. I shouldn't say that. Something that would be overly optimistic, right? So why take that kind of risk? Why do that, right? So for me, I would be here. Understanding that I could be tight and I could get stopped out there. We might have a little spike down. You never know. But for me, if that's the case, then I'll just alarm it, and then look for a second entry. I want to be in with a low amount of risk. So there I get 7.9 to 1. So if I zoom back out. So see, that risk reward is what gets my attention. So if I pull it down here, it's not that much worse, but now we're at 4.3 to 1. I like the lower parallel offering that structural support. So for me, I'd be right here, maybe a little cushion under the 65, but no reason to be much beyond that, because if we're going to head down lower, now, certainly we know that a wave 2 can be that low, and that would be a revisit to the 50, but I just as soon take the little one. If I have to get long again, I've got no problem. It might be something like that, where then you take, if you get a little pullback, then try again right there, because then I can work off of that pivot. So I like to have a clear path for, okay, if my premise is that this lower parallel should hold, and we've got this little corner here between the 50 and the 618, I'm buying it off of that. If it breaks that, then my premise is wrong. So I'd rather take the small loser and look to re-enter. Right? So that wouldn't, see what happens here. So what you'd have to do, so if we don't violate this pivot, well, now we're adding other parallels. So then I'd have to go to the 1.5 and look at that and say, well, structurally, it's not as good. That's more distance than I want to see it go. Otherwise, see, this would have to go to a new low down here to reset the pitchfork. You see that? So if I'm going to stay here and work off of this, I like the low risk reward there. Personally, that's what I would prefer to do. That's how I would approach it, knowing again that it could easily do that. But this is how I would take it. So here all I'm looking for here is a return to the median line. I'm not saying that's your absolute top, but that could certainly play as a 1-2 into a third of the fifth. Right? So again, it's always about risk reward. So that at call it 7 to 1, depending on where how close you put your stop. 7 to 1, 6.5 to 1. That's the kind of risk reward that I look for, and this is all technically sets up quite nicely. So let me pull this off here. So there it is. Okay, so if we come down here, here's my little entry zone right there. So I'm just going to play off of that. That's what I like. So do we come down there? Oscillators, any help? Well, clearly we can identify the third here. That's pretty easy. Is this a 1-2? So we're looking for, if we start to ramp off of that and head towards the median line, we'd be looking for that oscillator to get above this pivot here, or pardon me, this peak here of our one wave, to imply that we had a third underway in our fifth. Now, not expecting it to go beyond this peak here. It could, but I'm not expecting that. What I'm expecting is to see it get beyond this to imply that I'm in the third of my fifth. So that's what I see there. That looks like a really reasonable trade. We're coming, we've just hit the 38.2 twice now. I like it a little bit lower. I think that's a really, just a valid entry with good risk reward, with a nice fat target up here, and then further upside. So this might be, if we get that turn and we head towards this, that's the negative 100 on it. But really, it's about getting to the median line. Here's the first algo target, which would be just to check that. It's kind of interesting to see, would that get us a third wave if we're buyer at the 50. Yeah, it was. So here's 100. So here we'd be not, we wouldn't be able to call it a third. You'd have the potential for an ABC, right? So you got to be conscious of that. If we don't get to 100%, then the alternate is that this would be an A wave, not a one wave, and we'd be potentially making a larger retracement relative to the length of this third. Do you see that distinction? That's why this would be important here at the 100%. So at least we're not shorter than the first wave. But right now, no reason to think that that wouldn't be the path that we see, unless it's not, right? I mean, if we head down here, then we got to rethink it. Wait a minute. What kind of shape does this take? Are we potentially putting in an A, B, C? And that would be, not, it wouldn't change the long-term count, but it wouldn't be good for this trade. But yet again, small loser. Okay, guys, that's it for that one.